Okay, we are starting to record. About half of you are here, a little over half. Let's see, Carl Cooper's not here yet. Uh, Devon is not here yet. Brooke is here. Tony Hood, not here yet. Fraser's here. Marcus Neal, not. Natasha is here. Amy is not here yet. Let's see, Jeff is here, and RJ is here, and Alicia's here. Okay, these folks may come in, they may not. Anyway, we were on payroll the other day, and Alicia said it took her a long time to do Cengage. Has anybody finished? Fraser, how are you doing on Cengage?
I'm about halfway through the first chapter. About halfway through it.
Halfway through chapter 11, yeah. I wouldn't expect you to be on 12. But try to wrap up chapter 11 by Thursday if you can, and do a couple more days. I didn't put a time limit on it, and don't want to. Well, come in, Marcus. Well, you made it just in time. If you'd have missed a day, I'd have had to drop you. All right. Anyway, we're on chapter 11, and chapter 11 had a little bit of notes payable in it. It had a whole lot of payroll. Now, what are the normal taxes taken out of a payroll check? What are the normal taxes? What's taken out of your check? What kind?
Social Security,
So-
Medicaid,
Social Security, Medicare, federal tax, and state income tax. That's the three, because Social Security and Medicare come under FICA. All right. Does anybody remember what taxes the employer pays on you? What taxes do the employer pay? The employer matches your Social Security and your Medicare, which is FICA. And the employer has to pay FUTA and SUTA. What is SUTA? State Unemployment Tax. The A stands for Act, State Unemployment Tax Act. The employer pays in a certain amount to federal and state in case you're unemployed with their firm. All right? When you quit the prison, were you able to draw unemployment?
No, because I went on into a different job.
Into another job, okay. But West Virginia pays a good unemployment rate. Now, some states, not West Virginia or Virginia, but some states take SUTA out on the employee. Very few states, but a few do. All right, we're going to go through PowerPoint real fast again. And I went through this the other day. I'm not going to spend a lot of time, but this is just review. Come in, Tony. All right, current liabilities, and there are some long-term debt, notes payable, mortgage payable, bonds payable. Those were over a year. Short-term notes payable. We can get a notes payable. We're going to swap our accounts payable. Somebody's going to give us a note. Now we're going to give a note and take care of our accounts payable. What's the interest on that note? Can you look at it and tell me the interest on it? $30. Can you look at it and tell me the interest on it? Well, can you calculate the interest on that note? So go ahead and calculate it. See if it is $30. Is it $30? That 30% of 6% 30-day method I told you. So I just moved my decimal two to the left, that's $10. 12% is twice 6%, that makes $20. 90 days is 1/2 times 60 days, so 1/2 times 20 is 30. But that's my way of doing it, okay? Don't try it if you don't know it. All right. When we pay off for a note, we debit the notes payable and the interest expense, and we credit cash. We'll be reviewing some of those and doing some problems on them. Notes payable for the borrower and the creditor. We did the creditor back in chapter 7 or 8 on the notes receivable and interest. We can borrow money from the bank and issue notes payable. Again, same entry. Debit notes payable, debit interest expense, credit cash. I told you a discounted note, you're only borrowing $19,250, but you're paying interest on $20,000. This is interest out in advance. That is not a good way to get a loan. It ups your APR from 15% to about 16%. We could go into the calculations, but I won't take the time. But when you pay off with a note, no interest expense, it's already been recorded. All right, now salary, that's the earnings. Salary can be salaries, wages, commissions, bonuses. For our Labor Standard Act, we talked about time and a half. Some places may pay double time. There are some deductions, federal, state, local. We don't have any local taxes in this area. No city income tax, no town income tax, no county income tax. We just have federal income tax, the state income tax, Medicare, medical insurance, pensions, and of course they should have put Social Security or FICA, F-I-C-A. A W-4, probably most of you don't earn enough to pay taxes on, and you might could check a box on here, exempt. If your parents are claiming you, don't claim any exemptions. I'd put 0 here if my parents were claiming me. Okay, you can have more withheld if you want to, but you could put exempt here. If last year you had a right to a refund of all taxes, and you expect a refund of all taxes this year, you can write the word exempt. And no taxes will be withheld on you, okay? Now, Alicia, you worked last year, right? Did you file a tax return? But did your parents still claim you? Okay. So when you're in college, of course, that's in the tax course, there's no set amount on how much money you can make. If all conditions are met, your parents can claim. But that's a W-4, something you fill out when you go to work. And you may fill out a W-4 West Virginia, W-4 Virginia for state. Come in, Carl. Hard to say, you hardly ever miss.
No, I don't miss.
All right. And the two that are not here, Amy and Devon, they hardly ever miss either. Okay, but a W-4, not worried too much about it. Now calculating IRS withholding, I'm not worried too much about it. But just for practice and to make you think, what if an employee, this is weekly. Now what if that employee makes $600 a week? Can you look at this table? Calculate the taxes for me on $600 a week. Take a minute, see what you can do with it. See if you remember. You made $600 this week. What is your federal income tax if you're looking at this method? For easier methods, there are tables. Let's see if you can make a calculation here. Okay, on the first $222, you're going to pay $17.90. Now, all over $222 is $378. You're going to pay 15%. So somebody multiply that for me. 15% of $378.
5670.
That'd be the federal income tax withheld. That'd be, looks like 74.60 would be your taxes withheld. Alright, but you're not gonna have to do that on a test, but just to make you think. Alright, so income tax withheld, I'll usually give that to you in a probability book, will give it to you. Then there's the FICA tax, and I tell you the FICA tax is broken down into Social Security and Medicare. Medicare is 1.45 in the real world, and Social Security is 6.2 in the real world. Now you pay in 7.65%. That's $7.65 per hundred, and the employer matches that for you. And I think Amy said her parents drew Social Security. That's to take care of us because the government didn't think we would save money ourselves for retirement, and a lot of people wouldn't. If you didn't get that if you got that $7.65 in a paycheck, you'd spend it. But it's going into your Social Security account. And this book we're using 6 and 1.5. So that's what we'll use. Now we may give contributions, we pay for life insurance, we pay for retirement. Those are some deductions. There's net pay and then there's gross pay. All right. If this person made $600 in a week, and what do we say the federal income tax was? What do we say that was, Fraser? Was it 74 what?
5670.
Yeah, but that was on the extra one. I added them together. What did I get?
7460, I think.
I think. We can back up real quick. I hate to go back that far. 7460, yeah. All right, we know the federal tax. Okay, state income tax, let's say is 5%. Social Security, 6%. Medicare, 1.5%. Now find the net pay. $600. Find me the net pay. You got federal. Let's do state, 5%, Social Security 6%, and Medicare 1.5%. What's 5% of 600?
30.
What is 6% of 600?
36.
What's 1.5% of 600?
9.
$9. Now those are your deductions. Minus federal, minus state, minus Social Security, minus Medicare. So what is my net pay now?
450, 40,
400 and what?
50.
So that's how much you would take home. Okay? And that's what a lot of this chapter is about. Computing net pay. So we've got gross earnings, federal income tax, Social Security, Medicare, retirement, United Fund. This person made $1,462. Their net pay is $1,072.70. Same thing there. Now here are the three federal taxes once again on the employer. Well, three taxes. FICA, that's the matching, 6 and 1.5, and federal unemployment. Sometimes this is just 0.8%. How do you write 0.8% as a decimal?
0.008.
Decimal 008, sure. And then state unemployment is usually 5.4 or lower. Some states are higher. So that depends. Those rates will have to be given to you. All right, we looked at a payroll register manual. I don't suggest doing payroll manual. Any kind of computer program, you put the hours in, you've already got put in there how much they get per hour, and the computer program will deduct the federal taxes, state, Social Security, and so on. And calculate overtime and double time. So definitely, back in the day, I did some payroll manual. I used to do payroll for a hairstylist beauty shop. She only had one employee, and I'd do her quarterly. You have to do a quarterly report if you got employees, and I'd tell her how much taxes to deduct on their employee, and I just got free haircuts. That's all I took. Free haircuts, and I did her payroll taxes. But I don't like to do a manual. I don't suggest you do a manual. Get a computer. All right, here is one entry, one of the major entries that we have in payroll accounting. That is the entry for the tax deductions and the net pay. We debit the expense, salaries or wages. We credit all the deductions, and we credit salaries payable or cash for the net pay. One major entry. Pretty much same stuff again. Now here are the taxes on the employer, and they're doing SUTAS 5.4, FUTAS 0.6. Here is your second major entry in payroll accounting, entry number 2. One for the net pay and the deductions, and one for the employer's taxes. Now, you may have other minor entries. When we make this deposit, can somebody tell me how much Social Security are you going to deposit? How much Social Security will you deposit? Double that. We took that much out on the employee, so you double the Social Security and Medicare when you deposit. Now, where do you deposit this at? You take it to a local bank, and they will take your taxes. They will send it in to IRS or the Treasury Department. So you just give it to a local bank. And there are certain rules on how much money you have when you make the deposit. Sometimes you gotta make a deposit weekly. You have weekly payroll and very much. But just take it to a local bank. Most of them are set up to accept all payroll taxes. This is one employee earning record. This is your W-2. All right, here's what this person made. And the federal taxes withheld. Here's his Social Security. Now, look at box 1 and box 3. Sometimes those are different because there's a limit, 100 and some thousand, on how much Social Security is deducted on. But there's no limit on Medicare. Now, this person's not getting any other fringe benefits. They don't even have a retirement plan set up. There's no state taxes withheld. There's only 6 states in the union. Florida and Tennessee are 2 of them that don't have a state income tax. So let's say you were making $100,000 in West Virginia and the state tax rate's 5%. Well, that's $5,000. Move to Tennessee and make $100,000, you don't owe that. Except sales tax in Tennessee is about 10%. In West Virginia, I believe you all said about 6%. My granddaughter down in Tennessee, she's a senior and she's got some kind of little bitty job. It's called tutoring, but she does it from home. She gets maybe 10 hours a week, but she had an experience filling out that W-4 and what to put on it. She'd never seen one. And for her paycheck, she had to put down her checking account number and a routing number because it's automatically deposited. Now, Alicia, is yours automatic deposit or you pick up a check?
Pay them a check.
How about you, Brooke? You work? Is yours automatically deposited?
Yeah.
So you don't see a paycheck? Okay. But most checks are automatically deposited now. Could we be a country that has no cash? Could we operate with no cash whatsoever? Could we just use a debit and credit card? We could. We could. It was proposed one time that combine all the credit card numbers. Everybody just have one number, and that one number would be implanted on your wrist. And you just have to have that scanned at the grocery store, and it takes money out of your account for groceries. And your money is automatically transferred in, right? To a degree, we're doing that. You don't have to carry cash with you anymore if you got a credit or debit card, or both. Of course, a lot of people protesting having one credit card number implanted on your skin because of what? Surely one person here knows. Because,
Cut your hand off.
Market
market bids. That you have to have a number to buy and sell. But do you have to have a number to buy and sell, a credit card number, driver's license number, tutor ID number? We gotta have numbers for everything, don't we? Passwords made up of numbers sometime, but, your routing number, your bank account number, we got, you know, your street address, post office box number, we gotta have numbers. But we could be a cashless society that would save on robberies, but that also would hurt the black market. They don't use computers, they use cash, illegal drugs, alcohol, whatever it may be. All right, some use just a payroll bank account, some use a regular account. A computerized system, you put all the information about the employee in it. Benefits will be vacation pay, medical insurance, retirement benefits, or even babysitting services. Some companies now are offering babysitting services. Okay, folks, I'm going to end the PowerPoint. I know there's a few other things there on vacation pay, but better look at this one though. A contingency is something that may not happen. Why do you get insurance on the automobile? In case of what? An accident. That's a contingency. Okay? And that's why we get insurance, to try to take care of contingencies. Okay? Now, estimates and other contingent liabilities might be warranties. Okay? Debit warranty expense and credit warranties payable. 5% of your sales of $60,000. Some things you take back, they repair them. Some things you take back, they replace them. And we've got to know the interest for those. If it's just fixed, credit supplies to fix it with. And credit wages payable for the labor. We looked at these three quick ratios. Does anybody remember what I said about working capital? How do you calculate working capital? Equals what? Current assets minus what? Now I told you all that working capital in accounting, we use WC. Did I not tell you all the story about the feller from England coming over to California to buy a ranch? All right, he came over and looked over the ranch. He wanted to buy it, but when the fellow went back to England, at the time we didn't have the cell phone. We had fax. He faxed the owner in California how many WCs he had on the property. And the owner said one. It's 6 miles down the road. And he says his daughter got married at that WC. It seats 200 people. They had their spring picnic at the WC. Well, the fellow in England, WC means water closet. Water closet means toilet, bathroom. Okay? And this old rancher, he didn't know what the fellow from England meant by WC. He thought it meant Wayside Chapel. So at Wayside Chapel did see 200 people, and they had a spring picnic there. His daughter got married there. But anyhow, so language, what are we talking about? Current ratio is current assets over current liabilities. And a quick ratio, we take out inventory out of the current assets. We'll practice those instead of talking about them. All right. We'll have a whole chapter on ratios before the semester ends. I don't hit these ratios too hard right now. All right, now I want you to turn to your book, to the exercises in the back of the book. Tony, Marcus, you still have your book from last semester?
I have ebook.
Is it good for 2 semesters?
Yeah.
Okay, good. E-books are getting popular. All right, let's turn to page 564. Take just a minute and do that first exercise, 11-1A, practice exercises. 11-1A, see if you can do A and B while I'm looking up solutions. I'm glad you're back. You out of town next week? Okay, folks, we're just looking for proceeds from a note. And did you get 100,000? If you borrow 100,000, if it's interest bearing, you get 100,000. But if it's a discounted note, you take the interest out in advance. You take out 1,000, and you only get 99,000. That's all that little exercise is trying to tell you. I want you to go down 3A, next one from the bottom, calculate, take a minute and calculate net pay. You folks online should be doing these same calculations. So Lisa, you got the net pay? How much you have?
1477.98.
Let's see if she's right. 1477 and 98 cents. Okay, gross pay, take out federal tax, social security tax, Medicare tax, net pay. Okay? Now, most of you, that's all you have deducted from your paycheck. Unless it's state of West Virginia tax. Now, is anybody a student worker up here? You work for the college? Are you exempt from any of these taxes?
Don't think so.
No, probably you just don't qualify to pay federal income tax.
Yeah.
But now there's some places, some jobs you may be exempt from social security tax, but I don't think it's student worker. Okay, that's net pay on notes, proceeds on notes, net pay for salary and so forth. All right, I want you to do 4A and 5A. That's payroll tax, 2 entries. Look back in your book at the two, number 1 and 2 that I marked for you. Entry 1, entry 2, they're in your book. Everybody try to practice too. 4A first. Page is your example.
548.
546 and 548. Go 2 pages. Well, I have your ebook with you. Bring up with your cell phone or laptop. Oh, yeah. Carl Cook, no book. Okay. Fraser, have you got 4A finished yet?
I think so, yeah.
What is your net pay?
I don't know. I don't have to finish that. Give me a second.
Do you have it, Brooke? All right, let's go ahead and look at it. It's just like we calculated over there in exercise 3, except we're putting in journal entries. We're debiting salaries expense. We're crediting Social Security tax payable, Medicare tax payable, federal income tax payable, and salaries payable with a net. Now this is problem 4, and you need to be practicing these calculations with us, and on Cengage, and on homework, so you'll be okay on a test. All right, let me give you a minute to do 5A, journalize the payroll tax expense. That's the second main entry in payroll. Has anybody got the total payroll tax expense, your debit? Does anybody have that amount?
I think it's 23, Steve, it's 25.
23?
Yeah.
All right, we'll look at it. Was this, we do 5A?
Yeah, I did that. I did the volunteer one.
Oh, okay, 5A. All right, now, folks. Social Security tax payable, 10.5. Medicare tax payable, 26.25. They gave you a state rate of 5.4. They gave you a federal rate of 0.6. And your total payroll tax expense is 14,925. That's the two main entries on payroll taxes. Sure, when we give these monies to the bank, we debit Social Security tax payable, debit Medicare tax payable, and credit cash when we make those deposits. All right, let's go down and read number page 565, vacation pay pensions. That is number 6. All right, this company provides its employees with vacation benefits, a defined contribution pension plan. Employees earn vacation pay of $19,500 for the period. The pension plan requires a contribution to the plan equal to 6% of employees' salaries, and they were $260,000. Now we've got to provide a journal entry for the warranty, for vacation and for pensions. So let's look at that one. I didn't want to give you time to do it. So we set up the vacation pay expense and credit vacation payable. That's all we do. And 6% of 260, pension expense debit and credit cash. We put that into some kind of retirement or pension plan for them. It could be pension plan payable. So that's a contingent liability, especially no, these are not contingent liabilities. These are must liabilities for most companies. Must liabilities. Okay, now let's look at number 7, estimated warranty. All right, this company sold $260,000 of equipment during January under a 1-year warranty. The cost of repair defects under the warranty is estimated at 4% of the sales price. So whatever 4% of 260 is. But then a customer required $100 for parts and $50 of labor. Make that entry. Make those 2 entries. Okay, let's just look at them. All right, that'd be product warranty expense debit, credit product warranty payable for 4% of 260. And then when we repair somebody's, we take it out of product warranty payable, we credit supplies, and we credit wages payable. But now what if you had to replace the whole thing? Then you would debit product warranty payable and credit inventory if you replace the whole thing. Has anybody had to use a product warranty lately? Anybody? All right. Now, what 2 problems did I ask you to look at today? What 2 problems or exercises did I assign for today? don't know if this thing will do pins or not. What? All right, what two problems were they?
1A, 2A,
1A.
2A.
All right, folks, now 1A, if I get over to the problems, is your entries associated with payroll liabilities. That's the bonds. And 2A is payroll. Now, I'm going to stick with those two problems. Now, I'm going to take those problems up on Thursday. I will take those problems up on Thursday, so please have them. Please try to have your Cengage completed for this chapter by Thursday.
What's that practice?
Now, Alicia said it was a long chapter.
Yeah, it's a long chapter.
Some of you are halfway finished, so, but try it. Aim for Thursday. Now, we're going to start just a little bit of a new chapter today.
What problems are due Thursday?
Do what?
What problems are due Thursday?
1 and 2. That's problem. 1A and 2A. Due Thursday. Alright? And of course the solutions are on Moodle. You can check your solutions. I don't want you to just go there and copy. Okay? Anyway, to close this out. Okay, we're going to look at partnerships, chapter 12. Now, first semester we looked at proprietorships. And we looked at a merchandise business and a service business. This semester we're going to look at chapter 12, partnerships. And then we're going to look at corporations. And then we're going to look at a manufacturing business. Well, we're through the service business. We're through the proprietorship. Proprietor is one owner. Partners is how much? How many people are there? There's a partnership? Two or more. Is anybody in here married? Are you married? Well, her partnership didn't make it. A marriage is a partnership. And why would you take a partner in business with you? Why would you want a partner? Let's say Fraser wants to take the bond into business with you. Why would you want to take the bond into business with you, Fraser?
We have the same goal.
You like the same type of product or company or service, whatever the partnership is. All right. Any other reason to take in a partner? Money. Help with the money to start the partnership. Any other reason?
No workload, sharing the workload.
Try to work load. Any other reason? Well, if they're famous and you just want their name, you might take them in just because of their name. Now, some people will like to take in a partner if you go fail, you like somebody to fail with you. You know, it's like if you buy a lemon automobile, you like for somebody else to buy a lemon automobile, so you're not the only one. You're stuck with one. But a partnership, two or more people. We know a proprietorship is easy to operate. And in a partnership, you should have an agreement, articles of partnership, and you should abide by it. I've been in 2 or 3 different partnerships. I was at one, last one I was in, I was with my brother in the used car business, and I had a good agreement with my brother, so we wouldn't have any arguments. Natasha, what do you think the number one cause of divorces are? Number one cause.
Or financial.
Money.
Believe it or not, it is money. Arguments over money. So, you know, the old story still holds true. It does with Latasha. Their eyes met, their lips met, their hearts met. The preacher met with them, and then the lawyer met with them. Okay. Anyhow, there's lots of other reasons for divorce. Just finances is number one argument in a household. The bills or who bought what or whatever. But sure, mother-in-laws cause divorces, children cause divorces, adultery causes divorces. There's a lot of reasons for divorces. And sometimes two people are just not compatible. They should never got married. Okay? But anyhow, Latasha, the way I did it, I lost my wife, cancer. I took care of her 13 years. She was supposed to live 3. She was fighting multiple myeloma. And I didn't have to miss a lot of work. I lived close to the car. When she died, a couple of years later, I married a lady. And she was 13 years younger than I married. And we found out that she was bipolar. So that was a marriage from hell. Anyway, we got divorced. And she found out she was bipolar and she'd taken her medicine. And she's back with me. But I won't marry her again. Okay? Okay? I had to settle up with her one time. I'm sure I'm going to settle up with her again. But anyhow, easier not being married to the same woman. So much easier to get along. Plus, she's taking bipolar medicine. Any of y'all ever live with a bipolar person
Not diagnosed.
or something else? It can be rough. Okay, a partnership, 2 or more people, and we need to learn to make the interest. The interest is about the same thing as if you were a proprietorship. You know, Alicia and Brooke start a new business. They both put in 10,000 apiece. So you debit cash for 20,000. You credit Alicia capital for 10, and you credit Brooke capital for 10. You just credit capital for another person or 2 or 3 or 4. Partnerships sometimes works out pretty good in the attorney law business or doctors or even dentist partners. Partnerships do work out. The big accounting firms, they're partnerships, and they have over 600 partners. Okay? So partnership and journal entry is going to be about the same. But one thing on partnership, we've got to know how to split income. Now, if you have a partnership, and if Felicia and Brooke made $50,000 the first year with no agreement, how would they split that $50,000?
25.
Who gets the other 50? Did you say 25? Who gets the other 50? You gonna give it to Fraser? You split it 50-50. What? Oh, 25,000. Oh, okay. Okay, yeah, I was looking at percent. 25,000, you were right. Is that 25? That's a song too, isn't it? And 25, a man still alive. Something like that. It is a song. Yeah, you'd split it 50-50.
Yeah.
Okay. Now, if we had a ratio, if we had 3 partners, and they made 90,000, and they were going to share it in a 1-to-2-to-3 ratio. Partner A, partner B, partner C. How much does partner A receive? 1-to-3 ratio. How much does partner A receive? How much? $30? That's a third. That's a third. No, he don't get a third. Maybe 15,000? All right, how do you do a ratio like that? How do you change that ratio to a fraction? Remember, fractions, decimals, percents, and ratios are the same thing. Now, this adds up to 6. So you got 1/6, 2/6, 3/6. Now, what is 1/6 of 90,000? 15. What is 2/6 of 90,000? 30. 3/6 is a half. What's half of 90,000? 45. A ratio, a percent, and a decimal are the same thing. Now, if Alicia works twice as long as Brooke, what is the ratio? Alicia works twice as long as Brooke in their massage parlor. What is the ratio? Alicia likes 40 hours. All right, if Alicia works 40 hours and Brooke only works 20, Alicia is working twice as long as Brooke. That'd reduce down 1-to-2. That would equal to 3. That'd be 1/3 and 2/3, wouldn't it? 40 hours based on 20 hours. So Alicia gets 2/3 of the income and Brooke gets 1/3 of the income. Ratios, fractions, decimals, and percents are the same thing. So if you get a chance, read this chapter. If you don't worry about it. I'll go over it Thursday. We'll look at your assignments on chapter 11, and I'll see you there. We'll end class today.